Now, here's more of the Brian Beatty Real Estate Show on the Big Talker, 1250 WTMA.
Welcome back, folks, to the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA and WTMA.com. I'm, of course, your host, Brian Beatty. And in the studio today, Derek Goulette with Fairway Independent Mortgage, helping us better understand the mortgage side of this business right now. We've already gotten some great information out of him, and we're going to keep pressing. We've got some more questions for him. And I teased before the end of last segment that I was curious to know, from your perspective, kind of where you see this market heading. Do we think rates are going up? Do we think we're staying the same? Do we think we're coming down a little bit? What's your crystal ball telling you?
Well, my crystal ball's fuzzy, but
yeah, mine too. I dropped it in the mud.
Yeah,
trying to wipe it off as best I can.
Seriously, I actually, based on a lot of the talking heads that I follow and watch, I think that rates are going to be steady to coming down in the foreseeable future. And I think that leads to good buying opportunities today, because if you find the right house, it's probably going to cost you less money in the near future. And by near, I mean, could be 6 to 18 months, but over that time frame, I think there's enough things that point to values holding and rates coming down.
Right. You had mentioned earlier, looking at the jobs market. Interestingly, Indeed just dropped 15% of their workforce. They laid off like 2,200 people, which is interesting because obviously they're the ones that have the data on, on the job market. And I think they went on to say in an article that was published recently that companies that are like boosting ads are that income is down 33%. And so when you start looking at these layoffs, especially, frankly, white collar layoffs, right? That means less money injected into the market, which affects everybody in all businesses, which causes layoffs for blue collar in all different areas, which leads to less consumer spending, which can lead to a recession, right? We mentioned that word in our last segment. And there are way more factors that go into that, but that is about the most watered down version I can give you in terms of what's likely going to happen here in the next little while, right?
Correct. Yes.
Yeah. So moving forward, I think the challenge that a lot of people have is they always want to time the market, right? They always want to know when's the best time to buy something, when's the best time to sell something. It's a very, very, very challenging thing to do. I would say that about 90% of that is luck. But for folks that are educated, that listen to this program, that spend their time making sure that they're an informed consumer, what do you say to the folks that are frankly trying to do that, trying to time the market? How do you help them do that? And is it also appropriate to kind of shift their way of thinking a little bit or introduce some new information to kind of help them through the broader understanding of why they're doing what they're doing?
Well, I think it's totally appropriate to try to shift their thinking because timing the market is virtually impossible. But I think if you can buy on that, because the market kind of does this U curve, on the way down, on the way back up. I think if you can buy anywhere near the bottom of the U, which we probably are, prices have softened, but what it does is it creates buying opportunities, even though somebody might be trading a 3% rate for a 6 or 6.5% rate today, and their payment might be higher. They might be able to move from the house that they like to the house that they love. And so there's no perfect time, but I think it's a really good time. And sellers that are on the market are motivated. And generally, you might be able to get closing costs paid for where you couldn't get them 6 to 12 months ago.
Right.
Or B, you might be able to get a better deal on the house today than you could 6 to 12 months ago. And in my opinion, I think you're better off taking a slightly higher price with closing costs than you are to get the lowest price overall on the house because the math works out better, but that's different.
Right. Yeah. And one of the great things about working with Derek is that he'll show this to you, right? He'll break this down. He'll say, all right, well, if you want to pay a lower price for the house and not have the seller pay your closing costs, here's what the payment looks like, versus maybe paying $6,000, $7,000, $8,000 more on the house, but having the seller pay your closing costs. Here's the difference in payment, and here's kind of the length of time that it would take for this to make sense or not make sense based on payment and how long you plan on staying in the house.
Correct. So the way I like to explain it just in really short form is when you're financing, you're getting a percentage of every dollar. So if you're putting 10% down, the bank is giving you 90% of every dollar that you're borrowing from them in the purchase price. Whereas closing costs are dollar for dollar. So you're getting no breaks on those from the bank because the bank's not covering 90% of that number.
Exactly. That makes perfect sense. The thing that is challenging, I think, at times for folks to hear, and this is just me being honest, is that, and our industry is very guilty of this, the real estate industry, because, every home, every time we talk to somebody, it's, well, this is the biggest investment of your life, right? And so they look at the home that they purchase, the home they live in, that they make memories in, that they raise their kids in, purely as an investment. And sometimes it kind of makes sense to, help them better understand that if you want to invest in real estate, invest in cash flowing real estate or invest in a flip or do something like that. This is your home. Yes, you want to make sure that you're making a wise financial decision on the home that you purchase because it likely represents your biggest asset. But to look at it purely from an investment perspective means that you're going to likely forego some incredible opportunities to purchase a home that does check all the boxes, that might not be at the exact right, perfect time to buy it. In other words, a lot of folks out there are just waiting for the stars to align. And I want to bring up another point that might help with kind of softening that initial blow in terms of, the folks that, look, you've got a 3% interest rate, life is good, you got some cash in the bank, you've done well through this recession, or not through this recession, but through COVID. And now you see this home that you want to buy, and it's going to be at a 6.5% interest rate.
Yep.
Talk with us a little bit about 2-1 rate buy downs. This is something that, basically got introduced, half a year ago, close to a year ago, maybe.
I'll say reintroduced.
Well, it's not new, but
correct, yeah.
Yeah, but it's a lot of people are hearing it for the first time now.
Yes.
And so help our listenership understand what a 2-1 rate buy down is, what it means, how much it costs, and why that might make sense for them.
Perfect. So a 2-1 buy down, in the easiest way to understand it and describe it is you are taking 2% out of your interest rate for the first 12 months in the form of your monthly payment. So we'll go with math. So if your payment should be $2,000 a month and we're taking 2% out of the rate and it drops to $1,500 a month, the seller's going to put $6,000 in an account for you for year one. Year two, it splits the difference. So it's $1,750. They're going to put another $3,000. The seller's going to put $9,000 in an account. And every month during the first 12 months, you're going to write a $1,500 check. We're going to grab $500 from that account. Therefore, it is taking 2% out of the interest rate in the form of payment to the buyer for that first 12 months. And then it takes 1% out in the next 12 months. And one of the really cool benefits of the program is that if rates do come down enough that we can refinance you before that time period is over, that money goes to the buyer. And it offsets either their closing costs or it's a check cut after you close, free money in your pocket, essentially, in some regard. So I think that there's a lot of scenarios where they make a ton of sense as long as they're explained correctly and people really go in with eyes wide open.
Mm-hmm.
Well, there was a second part of that question.
Well, I mean, it's just kind of piggybacking off of that. So let's, rates are 6.5%. Let's just grab a rate out of thin air. 6.5%. So you get a 2-1 buy down paid for by the seller.
Yep.
That means that for the first year that you have a mortgage, instead of it being 6.5%, it's 4.5%.
Correct.
Then the next year it's 5.5%. And then on year 3, it just goes to whatever the normal rate is for that 30-year fixed, 6.5%.
Yep.
Hopefully within that time frame, it makes enough sense for you to refinance and lock in to a new 30-year fixed rate somewhere in the fives, high fours. Who knows? I mean, that's the challenge is we don't know what the Fed's going to do. We don't necessarily know which direction this market's going to head. We can use our best guesses, but the 2-1 rate buy down, in my opinion, is a fantastic option for buyers right now in an environment where sellers are more open to providing that to the buyer. And that's one of the big differences between, the COVID market and now is that sellers didn't have to even consider something like that in order to sell their house because people are lined up down the street to look at their house and buy it. We do still have a similar element to that because there's hardly anything for sale in our market. Like the inventory has not gone up like we hoped it would have in March, which is March and April are like the two telltale signs for how the rest of the year is going to shape out based seasonally adjusted. So because of this lack of inventory, sellers still do have a bit of an upper hand, but the consumer confidence is low enough to the point where people are open to negotiations and willing to do kind of what they need to do to make a deal work so long as it makes sense.
Correct.
So the buyers out there that are saying, well, I'm going to wait for rates to come down or I'm going to wait for prices to come down, that's you could be waiting a long time for that. But for the folks that say I'm waiting for the rate to come down, there's a way to accomplish what you're trying to accomplish right now and have it be paid for by the seller.
Correct.
Which might not always be the case. Well, it's certainly not always going to be the case. But if you think about this, let's say that, in May when they revisit things, interest rates go down to 4%. Probably not going to happen. But let's just, for the sake of argument, say that interest rates suddenly drop to 4%. Well, what's that going to do to prices?
Go up.
It's going to shoot them way up.
Yeah,
right?
Because all of a sudden, the person who's sitting on a whole bunch of equity can now afford something much bigger.
And I'm telling you right now, there are a ton of people on the sidelines right now that would like to move if everything kind of makes sense. They don't need to move. It's a want, not a need.
Yep.
But there is a very large portion of people that we call shadow inventory, right? People that would sell if, say, we brought them an offer and it made sense to them, or they didn't have to market their home, or so on and so forth. And so that's what we work so hard as a real estate team to develop, is this list of opportunities that are not publicly available. I mean, that's one of the great benefits in working with a seasoned, high-performing real estate agent, is that we've got this huge database of people that represent opportunities that no one else has access to. And so, I want to give out your contact information again. I want to make sure that people know how to reach you, Derek, and then I just want to kind of close with some final thoughts on your end about the market, or about anything that you'd like to share with our listenership.
Sounds good.
So your contact info, best way to reach you is?
Cell phone, 949-280-8044. That's 949-280-8044.
And then I guess just final thoughts. Is there anything that we didn't cover that you think is important for folks to know, or anything just on your mind that you're willing to share?
No, I mean, I would just say there's probably more hesitancy in a lot of buyers to start that application process because they don't really know what's going to be available. But I still think that's such a vitally important step. Having the conversation. It doesn't always mean we're running credit. It doesn't always mean that we're gathering every last piece from you. But having an idea of what it is that you can or cannot do is so important when you go into this, whether you're selling for the first time, selling for the 10th time, buying for the first time, buying for the 10th time. You might have an idea, but a lender might tell you something different. And so start that conversation earlier than you think you need to, so that when the right opportunity comes up, you're ready to go.
Absolutely. We've been talking about that for so long on this program, that the fact that there's this, a lot of people just don't want to have the conversation. They just don't want to have that either invasion of their privacy, or they just feel like, hey, it's too soon. I'll get to it when I find a house that I like.
Yep.
And I can't tell you the number of times where, even though we suggest that we can't force people to do anything.
Correct.
Right? But it just frankly sucks when a buyer finds a home that they really like. They've been waiting for maybe months and months and months for this home to hit the market, only to find out that there's, something on their credit report that's inaccurate or that they didn't know about, that's dragging down their score, which increases their cost, which makes it doesn't make sense to move forward with the purchase at that time. All of which could have been prevented and handled. Or even if those things don't exist, you can look at it through, a clear lens and say, hey, if you did this, or if you paid this down, or if you did this, that, or the other, then we can get you an even better rate and lower your payments even more. I mean, the consultative approach that good lenders take is extremely valuable, because here's the reality, folks. There is a massive opportunity to lose a lot of money when you're transacting in real estate. And there are a bunch of different, toll booths along the way that you pass through in terms of like negotiating a deal, right? The initial negotiations, negotiating repairs, negotiating this, that, and the other. The people you work with, the service providers that you work with, how much they cost. Are there any pass-through savings because of the volume of business that the agent does with that particular service provider? Same thing with lenders. I mean, there's just the massive opportunity to either lose or make a lot of money in a transaction. And it's not all in one place. It's scattered throughout the transaction, which is why it's so important to work with a company that's thought through all those little things to provide you with the best opportunity to, frankly, make the most money possible on the purchase.
Or actually get the deal across the finish line.
That too. Yeah.
You the reason I brought that whole concept of like talking to somebody early is, and you alluded to it, but you also just might miss the house because of your inaction. You weren't ready to go and the house came up and you couldn't get to your lender fast enough.
Yeah.
There's lots of real world examples of that right now because inventory is tight.
Absolutely.
So,
well, thanks so much for being on the show. I really appreciate it.
Thanks for having me.
And, if you guys want to reach out to me, if you didn't get Derek's number down, you can always just give me a buzz or go to my website. My phone number is 843-800-0065. That's 800-0065. Or go to listingsincharleston.com. That's listingsincharleston.com, and just say, hey, I want to talk to Derek Goulette from Fairway Independent Mortgage. Great guy. I've got some questions for him, and I'll pass that information right along. So thanks again, Derek, and stick around for a little bit more of the Brian Beatty Real Estate Show right here on the Big Talker, 1250 WTMA and WTMA.com.
It's the Brian Beatty Real Estate Show, broadcast Saturday mornings at 9 and Sunday mornings at 10 on the Big Talker, 1250 WTMA.